There you can see a story today on the left-hand side there. Facebook's next fight, suits and more suits. You know who likes Facebook? Lawyers. Yeah. Lawyers a lot. Aaron Lucetti, the man who wrote that story, here with us on the Markets Hub. Dozens of lawsuits filed over Facebook's, we can say botched, right? Botched IPO.
Definitely not the way they wanted it to turn out.
No. Explain to us what's going on here.
Well, this is an interesting turn because the lawyers have been busy. It's just a different kind of case. I mean, coming out of the financial crisis, we've seen the LIBOR case. We've seen a lot of different things going on. But we haven't seen a lot of IPO stock drop cases in a few years ever since the internet boom and bust, which was sort of the glory days for that part of the legal industry. Now we saw the social media IPOs, Groupon, Zynga, and now Facebook have all come off their IPO price, and there's a lot of litigation around all of them. The granddaddy, of course, is Facebook. It's the biggest offering, $16 billion, and it was down about 45 or 50%. So a lot of losses, a lot of upset customers, a lot of upset brokers, and looking at like how this could happen.
Yeah. You're looking at a 6-month chart there of Facebook. You can see the sharp drop right when they went to the IPO, and they've been trending down ever since. Have these lawsuits kind of been trickling in, or has it suddenly become a flood?
Yeah, I mean, they trickled in over about a month. There was a race to get in, and after about mid-June, they sort of started to try to make sense of it in the courts and start to consolidate them down into fewer cases where there'd be one set of lawyers, one judge, and sort of one case rather than lots of different cases in different jurisdictions.
Now, are we looking at just class action suits against Facebook, or what else are we looking at?
Well, there's a few types of cases. I mean, we had the NASDAQ problems on day one, and that's produced some litigation as well. NASDAQ has said it's willing to pay $60 million, even though as an exchange, it has immunity past a certain amount, like $500,000. So it's going above and beyond to try to make customers whole and less upset with their trading problems. Problem is, there are a lot more losses on those first few days. Because of some of the trading glitches. So you have that set of litigation. You have the Facebook litigation, which generally boils down to what was disclosed in Facebook's filings right before the IPO. There are a lot of things swirling around about Facebook. It's such a fast-moving company. Revenues were growing, earnings were growing, but it was making this big transition into mobile where people look at Facebook on their iPhones, on their iPads, and so on. And that's very difficult for Facebook. They need to make sure that's as profitable as the old way of looking at Facebook, which was on your laptop or your desktop. So as the IPO was coming, they made a few disclosures about that, but the plaintiffs' lawyers say they didn't go far enough because also analysts were cutting estimates for Facebook's earnings, which is pretty rare to have a company ready to go for this IPO, this big opening show of a public company, and as that's happening, analysts are saying, not so sure about your revenues next year, earnings, so on. That's not a good combination.
Now, in your story, you point out that these sort of civil suits have a tendency to just drag on for years.
Right.
How big of a drag? How big of a drag is this going to be for Facebook? They're going to have to deal with this.
Yeah, in a nutshell, basically what will happen is the courts will pick a venue and pick a lead plaintiff, and they'll go through a pretty long fight with Facebook over whether the case gets to continue. About a third of the time, these securities class actions get thrown out. Generally, legal experts say that's not super likely to happen here because it's such a closely watched case. The judge is going to probably want to let it kind of play out a little bit. That gets expensive, and when that happens, it often settles. Now, it could settle for 2 cents on the dollar of losses. It could settle for more or less. A big question is going to be, how do you define the losses? The stock's off 45% from its opening, but a lot of the problems, a lot of the conduct, a lot of the issues at hand were just in the first week or so. So the defendants, likely Facebook and others, are going to say, really, you should just look at that first week if you're talking about potential damages, potential losses.
Is this something that is going to be, that's going to show up on the balance sheet? I mean, we're talking about so much money Facebook is going to have to put out in legal fees and payouts. Is this going to show up in the profit and loss statement?
It's probably not as big of an issue for Facebook right now, just on the class action side. If you roll the dice and send it to a jury, it could be a big number and it could affect them. Usually when they settle in a way that doesn't really materially impact the company's bottom line. The one thing you have to watch out for is if the SEC or the state regulators like Massachusetts is looking at this, if they find something that they want to make a point of or they find very unfair, they could push for a big fine, and that could have at least a short-term impact on Facebook.
All right, Aaron Lucetti, thank you very much.
Thanks.
Appreciate the time.